Okay, let's jump into it. Where we are, coming up to the end of the month. I think it's well, it is 30th today. I think that's last day of the month of April. So start off with Aussie anyway. Look, it has just been absolutely grinding this recovery level up here. As you can see, it's coming up to the 78% recovery of this drop off, and this drop off here, the sort of largest sort of drop down here was the US CPI. When that came in a little bit hotter, and then obviously came down here, came to a nice little wedge, broke out, stopped out absolutely everybody. Like this is, I mean, we all know this. This is the Iran bomb retaliation from Israel lows, and it has just been grinding and pushing and pumping all the way up over here and that. So I closed a lot of my longs yesterday, and like it's one of those things you sort of, you got to fight that little bit of FOMO and that because you're kind of thinking, well, still going, still going, still going. But I want to try and get a little bit of a better price. I do believe that we're going to come up and be testing 66, which is just up over here, which we can see was a little bit of a sort of previous, like, I mean, this is in a range, but you can see that obviously just the round number sort of coming into effect and playing as a little bit of support there and back. Um, so yes, as I was saying, sort of like there's that little sort of like sort of 66 round number. You can see it was a little bit of a sort of stopping point on the way up there, but not really significant in terms of structural setup. So look, 66 is kind of like a sort of conservative, but it's a good target. It's only a little way off now, 40 points or so. I mean, what did we hit? We hit 86 the other day. So realistically, this could very much spring and then just come up the top side over here. If we zoom down into this and we sort of looked at just this last leg and we sort of took that almost as a little bit of a sort of like flag pennant sort of setup, which would be something along these lines, I suppose, unless you wanted to draw one across here, because we can see that it is slightly respecting this. Point being is that if you did have this sort of push from the downside here, and then we sort of looked for a bit of a measured move up over the top over here, that gives you well up above 66. Not to sort of say that that's necessarily like, a perfect pennant, but it obviously has had a nice sort of expansion, pushed up here. It's consolidating this top area over here. If we get a close, I think realistically, if we build this out and we sort of go, okay, look, if we get a close above, say, 80, I would say that there's a good chance that we do get a push up above 66. So that's what I'll be looking for at the moment. As I said, I did close my sort of the bulk of my longs. So I am sort of a little bit cautious just with FOMC coming up this week. We've also got retail figures coming out today. So, I mean, there are a couple of things. We've got a very strong sort of recovery coming up through here. And from a structural standpoint, it does feel like it should undo this move up to the top over here, 66.26. So I still will just wait for that little bit more of confirmation. That's too many times it's sort of like ended up sort of like having another dip, having another dip, having another dip, and then sort of like, once it gets to that last little bit, that's when it goes boom and drops back down. You either get stopped out or you're holding some drawdown for a period and that. So ideally, if I could have got down around this 30 level, I would have liked a little bit of more of a sort of shake just to sort of come back here, just to sort of rattle a few people, hit some stops from down under here, um, just to sort of see if we could get a bit of a better price than that. But yes, still above 66 is my sort of short-term target for Aussie. Gold, so metals. From yesterday, obviously I was saying that, look, I thought we were going to be coming down through here. This flag is still kind of in play. It's obviously sort of starting to come into a little bit of a grind at the side over here. Again, I think a lot of the market is really just sort of waiting for what's going to be happening with FOMC. I mean, it's not going to be a shocker with FOMC. It's going to be, 99.9% a hold. I mean, hikes aren't on the cards. They're not ready to cut. So, I mean, there's no real sort of surprise to sort of come with that. But really, what we're looking for is the press conference afterwards. So the press conference is going to sort of tell us, sort of give us a bit more of an idea of what their sort of thoughts are moving forward. Because the big thing with US dollar at the moment, and particularly between sort of like the other sort of euro basically, the other one that makes up a large portion of the DXY, is whether the ECB or whether the Fed are going to cut first. At this stage, it's looking like it's a back and forth kind of thing, but it's looking like the ECB are going to cut before the Fed. I think the ECB is set for June and the Fed for September. Don't quote me on that, but I'm pretty sure that's the sort of case. Obviously, with that, that's going to strengthen US dollar as the euro weakens. So we're going to have to sort of see how that sort of plays out. But anyway, that's what we're looking for the FOMC. I think gold is going to react on that. So gold, as I said, I like to call it sort of risk fluid because it can be a risk on asset, it can be a risk off asset, and we know that sort of like particularly sort of other things like war and all these kind of things and all that sort of geopolitical tension that'll drive and keep gold up higher. A weak US dollar will also keep it up higher. So I think we're sort of like getting to the, not sort of getting out of the woods with the sort of geopolitical sort of side of stuff, but I think certainly it's really calmed down from what it was before. Like it was very sort of heightened before, and it was like, well, this is World War III is about to kick off and all this kind of stuff. But I mean, short of sort of hearing this little bit in the news about sort of like, maybe Hamas are going to come to the table with some peace talks or something like this. It's not as prominent in the news as it was a couple of days ago. And, that's not to sort of say that it's not as important and this kind of stuff, like, in the scheme of life and all this kind of thing. But we're talking about markets. And if it's not sort of being blasted into people's faces every single day, that's a signal that kind of the markets are moving on from that particular topic. And if that's what was keeping metals elevated, that's not there. If US dollar can start to push up, well, that's going to impact. That's going to be back to being one of the sort of driving forces of the gold and metals prices. I do believe that DXY is sort of going to be coming back down to 104, so that does go. It's a bit of a counterintuitive sort of call there, but I do think at the moment still there's so much profit on the table from people that have been long through this period. I just think that there's some more pullback to become. So again, look, I plan for both of them. If we get above 50, okay, well, I'll switch the bias to a short-term buy. But again, once we get back up around these sort of like, if we get an option to sell it again around sort of like high 23s, 2400, I'm going to be shorting it again up over here. So I do believe downside is the direction we're going. It's not to say that we can't go up before we go down, but certainly if we get up here, I'm going to be shorting it. If we get down underneath here, I'm going to be adding to shorts. And particularly if we get down under 2290, that's where I'm going to be sort of packing in a little bit because I think there's sort of like, yes, we've got little levels of support along here, but I think that this area here, this 2220s, 2230s, I think that sort of lines up with a couple of things, which again, if you sort of zoom this right back out and you sort of look at this last sort of push off from sort of 1980s, if we sort of put drag a bit of, actually, I'll chuck onto this other gold chart because it's a bit cleaner. Because we're seeing it really sort of, test this, it's grinding along, but it's really testing that sort of short-term trend through here. But if we sort of drag it from the lows down here in the 1980s, right up to the top over here, you can see that, look, the 23 lines up pretty well with where it has been supported, and it's trying to hold around here. It's not sort of too much of a sort of a long shot to say that, look, 38 starting to line up with some levels down here. But if we come back down around these 2150s over here, we got the 61%. Like, you know what I mean? Like, it's only 23% off the highs at the moment. So there's still a lot of profit on the table here. So a deeper pullback is certainly something that is a high potential in my opinion. And so yes, I'm still looking overall with a downside bias on gold. But again, if things change, I'm always happy to sort of flip. But above sort of 2050, I'll be looking for maybe some short-term buys. But certainly, again, I won't be holding these, looking for sort of new all-time highs. Not at this stage. We just don't have the catalyst to sort of really put in. And I mean, why is the market going to an all-time high right now? You know, geopolitical stuff's cooling off. The only thing that would really sort of maybe get it there, and this is a maybe, is if US dollar absolutely packs it in, which I do believe it will. But that's not obviously about to happen right now. And that we've got the USD fanboys and that those are keeping the whole thing sort of elevated. All right, flip across. So speaking of which, we have DXY, and DXY is really sort of firming up this area here now. So yesterday we were sort of looking at this sort of period here, and we were saying, look, consolidating up over here. And I said in the video, look, I don't believe that this is about to pop out the top side here. There was no reason for this really to come up over here. The news that came out on Friday was, I mean, it wasn't terrible, but it wasn't anything shocking. And that's the biggest thing. It needs to be shocking. It needs, because if it's not shocking and it comes in as expected, market's already priced it in. So there's no reason for this to shoot out up the top side over here. Hence why I bought Aussie on these sort of things. I got Aussie at sort of, what was it, 65.18 over Friday night, which was great because I think it came in, as you can see, sort of on that dip down to 18 just here. That was the Friday night there. As you can see, Friday, 11 o'clock down here, boom, I picked it up there. So, you know what I mean, that, back to where we were, the DXY. Yeah, that given that there was no real reason for this to come up over here, you can see the market's just undone the move. So there we go. But for now, it's really shoring up these lines. Like we're seeing this top side here was obviously respected very well. This little midway point here, you can see it's been respected a number of times. You know, where are we at here? Up through here, a little bit of an overshoot here, but rejected down here, tried to hold it here, rejected here. So this means that this midway point is very crucial for its sort of point of its swing. You can see that the sort of downward sort of sloping support has been respected time and time and time and time again. Top side respected time and time again. So this gives us 3 points that we can really look at. We can gauge it where the market's going to be moving in short terms. So if as long as we're on the downside here, this is the area that we're going to be sort of tackling. We do have this sort of main main medium term sort of support just below this sort of channel. So if we do come down here, there's a good chance that we sort of pop back up into it anyway and then sort of come down. So I'd look for really a break of this main trend through here, and then I'd be looking for 104 as that area. It seems like a reasonable area. It was held by support a lot of time. As you can see, these moves, they like to get undone. So, very rarely, unless it's going to be a long, strong trending move, do they just keep on pumping on. And particularly, as I said, it keeps saying sort of like with rate cuts really on the forefront, it's not a matter of if, it's a matter of when. That really puts a lot of pressure on people to be buying US dollar at this stage. I mean, why are you going to be buying it when they're going to be cutting soon? So that's just my thoughts with the US dollar. I do believe, yeah, we do have a couple of levels of support. We got this sort of horizontal through here. We've got this rising support through here. So there's going to be people that are going to want to buy it once it does pop down here. But for the short term, it's really just this little grind down here. And I expect this to happen through till Thursday morning local time, so which is when we have FOMC. I don't expect to get a major break one way or the other. If it gets out the top side here, I'll be looking to sort of basically short term US dollars. If it get down the bottom side here, I'll be looking to buy it. So I do believe if we do pop out here, we're going to come back in. If we pop out here, we're going to come back in. And that's just going to be the case through to the end of the week. FOMC, as I said, the press conference is going to be really sort of what the market's going to be waiting to see, sort of what Powell thinks sort of moving forward. Flip across quickly, copper, just unbelievable, just keeps on going. I mean, it just goes up and up and up and up and up and up. So too bad for the people that were sort of shorting this. It just gained another 2% overnight. So it's really just on a rip at the moment. Let's get back onto the day because you can really see where it's going to go here. As I said, this is why you go through, you mark all these levels out because this has just been an absolute rip-roar up to the top side here. Look, it's coming up into what could be some of this little range kind of stuff over here. But at the moment, look, it's got the RSI sort of supporting it, tipping back up to give it another big push to the top side, particularly while US dollar seems to be sort of, on the back foot. Copper is a good sort of proxy for risk because what I mean, prices going up, people are happy they're kind of going to be sort of like producing a little bit more. They use copper. Well, that's a risk on. People aren't sort of like hunkering down and not using this kind of stuff and that sort of, when they're feeling good. They do that when they're feeling bad about outlooks and that kind of stuff. So, geez, I need to fix up that subscription. So yeah, look, it's hard to sort of say where to trade this at the moment because it's just, you know what I mean, like since it popped through that 39 back test, it's just exploded back up. you could say, okay, look, I mean, here's a little support area around here. Any sort of pullback to sort of like 4,500, I would be looking, or 4,005, or whatever you want to call it, 450. Any sort of pullback to this area, I'd probably be looking to add to it. I wouldn't be surprised if maybe we do get some sort of consolidation around this area, sort of coming back to this sort of trend through here. This is a very steep angle, and things, as we know, once they go up on steep angles, they can't maintain that forever. But in saying that, it could also go up to 4,800 before we actually see some sort of pullback. So, you know what I mean? I wouldn't be looking to sort of try and sort of pick the top and short this thing here. Certainly, if we get up around this sort of like 48, 4,900, I would say that that's probably at least worth a sort of stab for a short, because we can see these are sort of like some serious highs over here. And if we sort of go back out onto like a weekly even, you can see that these have been sort of weekly highs, you know, very much, you know, I haven't traded coppers long enough to know if it's actually sort of ever been at these levels. Obviously, apart from these ones here in sort of 22. But you can just see this as on a weekly chart here. That is absolutely just taken off. So tough luck to anybody going on the short side of that one. But I've been calling this ever since we broke this level here. It did stuff around and, you know, does your head in a little bit down here. But once it went, well, it's really sort of, it's just gone crazy. And finally, with China on a bit of a lower time frame, well, lower time frame than the weekly, but actually pop it back onto the weekly for 1 second, and you can just see that China is doing its thing. This is the head and shoulders I've been sort of calling for quite some time. As you see, we've still got our measured move set up down here with a price target down here, sub sort of 7. You can see it's just doing its thing. It's consolidating super tight. It does this. It'll sort of leveled up, level down, grind, level up, grind, level up, grind, and then I expect it to sort of maybe pop down the bottom side over here. As you can see, it's not really giving up anything at the moment. It's just something you got to kind of wait for, and when it breaks, you can see it can have a little bit of an expansion or, you know, contraction, whatever you want to call it, and so certainly come back down. But for now, it's obviously looking like it wants to push down a little bit lower. But once we get underneath this little support area, you know, we've obviously got some little buyers sort of around this sort of 720 area. The 720 area was a place that they held for a long time. And as you can see, once they gave it up, they really exploded up to the top side here. So it would favor another continuation move up like this, but I just don't think it moves like that because as you can see, sort of this is moving down, consolidation, undid it. You know, up over here, this was that 3 month period that was just there forever. This was that intervention, bang, which is interesting because we're seeing BOJ sort of intervening a little bit at the moment, even though they're saying they're not. You know, UJ got up over 160 and then drops 500 points. That's not market. That needs some serious weight. That's some sort of intervention stuff. So we'll see now how that sort of plays out. But certainly, I think I'll be sort of moving this up a little bit. No, I've got to wait for this. I've got to upgrade this thing, don't I? No. Boom. Anyway, I think we've got a little bit of downside coming here. Okay, that's it from me, Dave. Just a quick one.